Hey guys, Stock Saturday, and it's been a sort of slightly green week, considering what's been happening in the markets. I was pretty happy with that. We've seen the S&P down 3.5%, sort of largely led by big tech and sort of AI-related big tech, it seems. And this has dropped the Nasdaq down 2% just on Friday, and just over 6% for the week. So yeah, that's not great for the market. I am up 2%. Obviously, I had a reasonably large drop last week, and this is sort of crypto miners going all over the place and gold miners. So yeah, 2% for the week. I was pretty happy with. I have put in £2,000, so the number's a little bit higher. And yeah, you can probably guess where that is going. So let's have a look at some of the news. So Riot Platforms, one of my newest holdings, just sort of a quick update from them to say they have energized their substation at the Corsicana facility. So building A1 is now sort of pretty much turning on. They've got a great deal of the miners already hashing, and miners will be continued to be deployed until they reach their 3.7 exahash, and sort of the remainder of the three buildings will be become operational over the next several months. So 31 exahash, they're still saying, by end of 2024, and they sort of had a fairly large gain yesterday, sort of from the looks of it, the most of any crypto miner. So that's pretty good. And we have Taiwan Semiconductor reporting. They're sort of my earliest reporter, one of the earliest sort of reporters of all, really, just after the banks. So they always start with their balance sheet, which is quite nice. It's looking pretty strong. Cash and cash equivalents up to just under 1.7 trillion new Taiwan dollars. So that's 53 billion US dollars, up from sort of 1.46 previous quarter and 1.385 this quarter last year. So very nice. Marketable financial instruments, basically a little bit more cash, is up slightly, and yeah, total current assets looking very healthy. Not property, plant and equipment sort of hasn't really increased, although they are spending a great deal of money, of course. Depreciation is still rather high, and current liabilities not really increased too much in the way of debts. It's just expenses and bits and pieces. Current portion of bonds is very short, and bonds pay it, so long-term debt is up to 955 billion dollars, Taiwan dollars, up from 913 and 848 this quarter last year. So yeah, not too bad. Total liabilities up ever so slightly, and current assets up quite a lot. Revenue-wise, we sort of knew this was coming. It's a little bit weaker than Q4 2023. It's a very seasonal company. I think Q4 you always have the Apple iPhone release go into this. If I'm reading it right, it's always sort of Q4 and other people sort of releasing stuff at the end of the year. So they need the chips for that. I presume that revenue goes into fourth quarter for TSMC as well. That's why Q4 would always be higher, but correct me if I'm wrong. So 592 billion US new Taiwan dollars, down from 625, but up from 508 this quarter last year. So a really decent increase, 16% year on year, although 5.3% down from Q4. But I think that's as I say, a bit of an unfair comparison. So it's 18 billion, 18.8 billion US dollars. So pretty good. Costs 25% up year on year, so up more than revenue. Profits down slightly, but last year was a very good year. And then yeah, operating expenses down a little. It's basically all the same, down a little from last quarter, but up quite a bit from this quarter last year. So overall, expenses are up, inflation, and various reasons. But you come down to net income of 225 billion, so up 8.8%. Not too bad. Obviously, as I say, revenue is up, but costs are up more. So 8.8% gain, not too bad. Down slightly on last quarter, but looking good. Just coming over to their presentation as well. They sort of compared this to guidance, so everything was pretty much at the high end of guidance. Gross margin sort of slightly above the midpoint, but operating margins and the revenue side certainly, well, revenue slightly beating even the high end of guidance. So pretty good. By technology, revenue by technology, 3 nanometer, slightly smaller. Again, I would think that's the iPhone sort of going into the fourth quarter and less so in the first quarter. But yeah, correct me if I'm wrong. Revenue by platform, again, sort of this is quarter on quarter, so it's comparing to last quarter. Smartphones down would sort of give that indication. Balance sheet, sort of already looked at the balance sheet, but the second quarter guidance, revenue between 19.6 and 20.4 USD billion, so not too bad. Gross profit 51 to 53 and operating profit 40 to 42. So that's pretty much the same as where we were. Slightly lower gross margin, but exactly the same operating margins. Whether people were sort of hoping this would be drastically increasing with the sort of AI boom and everything, it doesn't seem to have, and the stocks dropped a little as a result. But yeah, nothing too bad that I can see. A few sort of bits and pieces in the major events. Dividend sort of not really too important. It's not really a dividend focused company. And the CHIPS Act, which is a big development, 6.6 billion, finally confirmed as their well, up to 6.6 billion as their incentive from the US to carry on building in Arizona, even if they aren't going to be building the sort of leading edge super advanced chips. Then you have a once a year event, the World Silver Survey from the Silver Institute, sponsored by sort of various people, one of mine included there, Coeur Mining and Pan American Silver. So pretty good. And Glencore, obviously they don't do a huge amount of silver, but yeah, not too bad. I am actually looking at Fresnillo. I've got my sort of KGHM holding sort of partially for the copper, but partially for the silver. And Fresnillo are actually the biggest silver miner in the world, so they're sort of probably the most silver, as far as I can see, one of the most silver-focused companies in the world, and at a sort of at a large scale. I'm sure there's probably some tiny little miner or sort of exploration companies that are 100% silver, but I don't really count that. I want sort of a large miner at scale, and yeah, sort of largest in the world. I may be having a look at them going forward. Obviously, I do already have rather a lot of miners, but doesn't hurt to diversify. Or I could be getting rid of potentially Fortuna silver mines at some point, so with their sort of changing to mostly gold and sort of having shorter mine life. So we'll see. But the Silver Survey had some interesting figures. The main one is the big summary. So we got the confirmed 2023 numbers and a forecast for 2024. So very interesting. Supply was a total supply, that is slightly down. So that's, I guess you could see good. That was sort of not necessarily a continuing long-term thing. That was just some issues with a couple of mines, one of Newmont's mines, I believe. And yeah, they're saying recycling was ever so slightly up, but mine production was a little down, and they're predicting both of these to continue into this year. So supply's not really going anywhere despite the price going up, which is sort of what a lot of people don't really see because of a huge amount of silver production or mine production is sort of a byproduct of other mines. So, silver price rockets up. Really, you have to start opening a load of new copper and sort of lead zinc mines to be able to get the silver. There aren't that many sort of pure silver mines out there for you to sort of go and start mining just because the price is up. So it's a very different situation to a lot of metals. You've seen things like lithium, obviously ramping up. We need more lithium, so there's been loads and loads of supply sort of coming on and in the pipeline, and yeah, sort of price goes up, supply goes up, and then that makes the price go down. Whereas with silver, you don't really have the supply going up responding to price. So very nice. And then on the demand side, 2023 saw a very large increase to industrial. That was sort of largely on the photovoltaic PV panels, solar panels. If you look at sort of was mingling around just under 100 million, sort of 80, 90 million ounces used, and then sort of ramped up to 118 in 2022, and then 193 in 2023. So this was way higher. This was forecast at 160 earlier last year, and they are predicting 232 for this year. So that's sort of over a fifth, getting towards 25% of total supply, which is completely used up in PV panels. This isn't sort of silver that can sit in people's hands and they sell it if the price goes up. This is consumed basically. So yeah, you've had sort of other industrial go up and sort of other electronics and bits and pieces go up. What you have had is net physical investment come down quite a bit. Was sort of 337 million in 2022. Again, that was up from previous years, but that has dropped off 243 down to 212 for this year's forecast. Not sure whether people may be sort of investing a bit more with the price up. So this forecast could end up rising potentially. But yeah, total demand up 1.2 billion ounces with a just over 1 billion ounce supply. That's another fairly strong deficit. And so market balance before the exchange traded products, your silver ETFs and that sort of thing, is forecasting a 215 million deficit, up from 184 million deficit last year. It was a bigger deficit in 2022, but deficit is deficit. It's destroying above ground stocks. So 184 million deficit last year. It's pretty good. But the net investment in exchange traded products has been negative for the last couple of years. So it's been sort of reducing the overall deficit. You've had sort of silver in exchange traded products, vaults sort of coming out and coming onto supply, but they are predicting the opposite this year. So 50 million going in. So that'd be pretty good. It turns an already large 215 million deficit into a 265 million deficit. So, and that's million ounces compared to, again, 1.003 billion ounces supply. So deficit of over 25% of annual supply. So I thought this was a really interesting chart, and it's showing, what we got. If we do get, obviously this is going to be a deficit unless something drastically changes. That's 6 years of supply deficit. There's some other interesting bits and pieces in here. I've had a look through this. You can have a sort of more detailed look in your own time if you want. But yeah, a few things I found interesting. The top 20 producing countries is sort of Mexico still as number 1, but they're down 5% year on year. China is number 2, down year on year. Peru, pretty flat. Chile has started increasing, 24% up year on year, but they're only sort of a quarter of what Mexico produce. Bolivia, again, sort of a fifth of what Mexico produce, but they're up 10%, and then sort of a few more smaller players. So it's really a Mexico and China sort of, well, South America operation as far as most of the production goes. And then, as I say, as far as mine production goes, you've got sort of primary silver, so people going for purely silver being 28% of mine supply, and then sort of the remainder coming from copper mines as a byproduct. So they're going for copper and just selling the silver sort of on the side. I'm sure they do sort of consider it reasonably important, but yeah, you don't sort of spin up a copper mine super quick, even if the silver price, you know, they're not going to be sort of going for a new copper mine just because the silver price is high, basically. Similarly with lead zinc, 30.8% of mine supply comes from lead zinc mines. So again, spinning up a new lead zinc mine, if lead zinc isn't very profitable, just to get the silver is unlikely. And then 13% from gold mines, which you would think they would be correlated. So yeah, interesting. And then top 20 producing companies, as I say, this was partly why I was looking at Fresnillo. Their sort of forecasts are looking fairly similar. They have extremely long potential mine life, sort of a lot in reserve, which they still need to do, you know, surveys on and make sure it is profitable to mine. But yeah, certainly a lot more than Fortuna, and they are the largest in the world. So 53.5 million ounces in 2023. And then my KGHM holding in second. And then sort of a few of my others in here. Some copper miners, obviously. Southern Copper are a big producer. And Polymetal, obviously the Russian one that is less favourable at the moment. And sort of Coeur Mining and First Majestic Silver and people sort of down the bottom. So people always say First Majestic Silver would be the one to go for because it's highly leveraged to silver, but they do actually do an awful lot of gold, and they're not really that big. I mean, Fresnillo's about 2.5 times the market cap, I think, of First Majestic Silver, and they do over 5 times the silver. So I would be thinking potentially Fresnillo, and I will be having a look into them rather soon. Just a brief report from Rio Tinto as well. Their first quarter production results not looking great, has to be said. Iron ore shipments, well, production is probably more important than shipments, but production's down 2% from this quarter last year and 11% from last quarter, end of 2023. So it's not ideal. Bauxite up 11% year on year, but down from last quarter. Aluminium similar, up 5% from year on year, down a little from last quarter. Similarly with copper, copper's 7% up though, that's pretty good. Do want them to be sort of moving more towards copper, and it's sort of the reason I'm investing more in people like KGHM than Rio Tinto. It sort of dropped a fair bit, and I didn't average down because I'm sort of less keen on iron ore. It's still obviously needed, but yeah, I do prefer copper a little. And then sort of titanium oxide and iron ore pellets and things are sort of the smaller operations. But yeah, not looking too bad. And then their 2024 guidance is basically unchanged for everything. So yeah, the copper is sort of looking pretty good. That's 2023, 620,000 ounces up to between 660 and 720 this year. So that's really decent growth. And sort of refined copper similarly up. Just noting their costs as well. Iron ore cash costs at 21.75 to 23.50 they're saying for this year. It's not all-in sustaining cost, of course. I do sort of prefer to see that. And copper, again, it's sort of C1 unit costs. That doesn't include everything, but yeah, $1.40 to $1.60 is rather nice with sort of copper pushing $4.30, $4.40 I think now. So yeah, starting to become very profitable considering they're increasing their mine capacity quite a bit. So yeah, hopefully a nice year for Rio Tinto. So news-wise, there was quite a lot. I've had to put the one-star news on because they count a lot of the UK news as one star, which is a bit of a dig at us, but fair enough. You had US retail sales a bit higher than expected, so that's pretty good, I guess. You had UK earnings slightly higher than expected. Well, it was the same as last month, but slightly higher than expected, and unemployment claims a little bit lower than expected, but 156,000 jobs less in the last 3 months, so that's not great. And unemployment rose to 4.2%, was only expected to rise to 4, so yeah, not ideal. Whether this means sort of we may be cutting sooner than the Fed. It's looking like European Central Bank may be cutting sooner than the Fed. So we'll have to see. US housing not looking particularly good either. Permits and starts both sort of worse than expected. And then you had UK inflation. As I say, no one cares. Everything's one star in importance. So we've had core CPI at 4.2% higher than last year. It was expected to be 4.1, but it is down from previous month. So it's not the end of the world, I suppose. 0.6% month on month. And yeah, pretty much everything else was level except headline CPI, 3.2%. Again, down from last month, but a little bit higher than expectations. But this 0.6% on the monthly numbers isn't particularly good. Obviously, annualized, that's 7.2%, although it could be just a one-off. European is sort of looking better than anyone, really. 2.9% core, and down from 3.1. It's all as expected, although 1.1% month on month. So, yeah, whether this is just sort of anomalies and strange things that go on in March, but who knows? And then I think that was pretty much it for the week. So portfolio-wise, a few things have taken a little bit of a whack. Stellantis sort of down, still below $26. It's sort of been a bit up and down, but taken a bit of a knock. Not too much, less than the market, I think. So Broadcom has been taking a bit more of a knock. As I say, all the sort of semiconductors and anything AI related seems to have taken a bit of a hit. Whether this is sort of Nvidia and the sort of poor TSMC news, well, I didn't see it as poor, but I think people were expecting a blowout. They sort of forecast slightly lower than people were hoping for. TSMC down to 127 now. They were at sort of high 140s even just a week ago. And yeah, not too much move in anything else, although my Himax position is rather down now. Still sort of wondering where that's going to go. We need probably another couple of earnings reports for them to see where things are really going. But obviously the money may have been lost by then, pretty much. Average at $8.31, so not ideal. On the ISA side, things are going pretty well. Since sort of a bit of a rebound in the Bitcoin miners. It's looking, we just had the Bitcoin halving at very early hours this morning, and fees have sort of spiked. It looks like a lot of people have switched their rigs off. The public miners obviously won't be. This is sort of very high production cost miners, and sort of I would think some of the miners in China, if they haven't been renewing their rigs. So yeah, you've had fees spike up, and hash rate presumably will come down a little. We'll have to see. There's obviously still a lot of new hash rate coming on from the public miners, so we'll have to see. Riot Platforms, as I say, 10% up just yesterday. Obviously still below my average cost, but yeah, maybe I bought at the wrong time. It did go down to 8. It did go down a little lower than 8, I think. So yeah, not the end of the world. Kerr Mining. Obviously, I should say, just going back to Riot, that I did, you know, have to sell my Bitcoin in order to save the tax. You could have said I could have put it in cash and waited for Riot, but yeah, you can't really think like that. So yeah, Kerr Mining and Equinox and Fortuna still sort of hovering around the same levels, with gold at $2,400. I still think these are sort of potentially got a hell of a lot more room to run. I'm not really looking at sort of buying the stock at the moment, but I am sort of looking at options still. One big change: I sold all of my Tritax Eurobox position, so I should reorder these, which I will do in a minute. And I put all that into Riot platforms, so that brought my cost down from sort of just over $10 to $9.84. Yeah, nothing wrong with Tritax Eurobox. Obviously, I was down 42%, but yeah, it's because I hadn't sort of averaged down at all. But yeah, it sort of looks fine, but I thought Riot Platforms was a much better prospect. Whether I'll sort of get back into Tritax at the end of end of the crypto bull run, I'll have to see. And on the interactive brokers side, everything sort of looking pretty good. KGHM right up at the highs, and Pan American sort of similar. Did get to $20, but yeah, I'm sure it'll be back there rather soon. And on the invest side, yeah, less said about Chinese tech, the better. Alibaba down under $70 now, despite the buybacks, but it's only a small position. And then, yeah, so I've added £2,000 into the option side, and I have spent quite a bit of it because I was only at £500 cash last week. A lot of this has been going into high max options actually, so I've sort of taken this gamble. I do have a reasonable amount of cash more to add, and sort of with the crypto side and the sort of gold and silver side that I think should do well. I'm kind of not really looking to buy sort of too much more of those at current prices, and high max is at sort of rock bottom. So this could potentially be completely dead money. I am kind of prepared for that. I'll have lost sort of 4 or 5 grand. You know, I'm down £2,000 at the moment, off a sort of just over 4.5 total investment. It's worth 2.6, but yeah, I still think there's potential for them to sort of turn things around, and people are just being sort of short-term bearish. These are January 2026 options, so still got a year and 9 months to go for things to turn around, and they're in sort of various AI related technology, and the screens, of course, which I still think in vehicles having more and more screens, their automotive side is looking to be close to 50% of revenue going forward. So yeah, I think they can do really well, and that's sort of where I'm piling into options at the moment. I think I was at 185, 184 or something contracts of these last week, so I bought 55 contracts in a week. And I bought a little bit of Riot platforms as well. So yeah, potentially sort of spending all of this in the next week and possibly adding another £2,000, because I still think this is potentially the best risk reward. As you can see, some of these sort of profit figures are starting to come up quite a bit. Kerr Mining was at sort of 350%. That's come down ever so slightly. And Equinox as well, but I do think all of these have got a hell of a lot more room to run if the stocks sort of do reasonably well. So we'll see. So leave your thoughts in comments below, and like and subscribe. See you soon.